Bitcoin will fall to $0 and is a Trojan horse of the elites. I was sent a highly explosive video by Ernst Wolff in which he makes these claims. We want to take a look at what it's all about. Ernst Wolff does really great work, explaining the dangers of the digital euro from BlackRock, large elites, and how they want to exert more and more power and control over us. He reveals information about the fiat money system and many, many important topics. However, on the topic of Bitcoin, I believe he is very wrong, and I have already received several messages asking me to make a reaction video to clarify this, because many people from our community are also enthusiastic about his analyses, as he really uncovers the dangers and the shocking things happening in our world, but he fails to connect the dots and recognize Bitcoin as a tool of freedom. Bitcoin is not meant to strengthen the elite or push any intelligence agencies or anything like that, but Bitcoin is actually a tool of freedom created to give us more self-sovereignty, and not, as it is propagated here, that Bitcoin enslaves us and is even the Trojan horse that can lead us into CBDCs or whatever. But I don't want to beat around the bush too much. Please take a look at the highly explosive clips from Ernst Wolff, and afterwards I will also give a brief assessment.
Can it be simplified to say that the counter movement is Bitcoin, which means financial freedom, and central bank money is financial dependence?
No, not at all. First of all, one must raise many question marks about Bitcoin. Bitcoin came onto the market in 2009, supposedly invented by a Japanese professor. If you talk to insiders. So no one believes that it was a single person, 2001. Moreover, it spread so quickly that there must have been significant forces behind the scenes helping to make it so popular. So I think Bitcoin is what Dirk Müller, the stock expert, referred to at the beginning. He said it is a Trojan horse. What was the result of Bitcoin? Bitcoin has taken many young people away from cash, and that was exactly the agenda that was pursued back then. So in 2012, the Better Than Cash Alliance was also founded, which works worldwide to further push back cash. So I would be very cautious. Bitcoin is also not democratic money. Currently, 91% of Bitcoin is in the hands of large investors. Only 9% is widely distributed. So that has nothing to do with democracy. And Bitcoin is, of course, a huge speculative object. We have seen that now. Elon Musk supported Donald Trump in the election campaign. Donald Trump won, and as a result, Bitcoin skyrocketed. So I also don't advise anyone not to invest in Bitcoin. I always tell people, if you want security, then it's better to invest in precious metals. But if you want to speculate, then it's quite possible that Bitcoin will rise significantly again. However, it is also possible that Bitcoin will eventually fall to its intrinsic value, which is zero. Bitcoin is nothing more than a data record that relies on people holding it as money.
So there were really many interesting points in there. For example, that Bitcoin is not financial freedom. 2001, I mean, there is nothing that brings you more financial freedom than Bitcoin, because we have a bank-independent system here. We don't have to rely on any third party. No banks, no BlackRocks, no central banks. We have a completely publicly accessible, transparent monetary system where the rules are clearly defined until 21 and 40, even beyond that. And we also have a censorship resistance here that doesn't exist in any other form, so to speak. Bitcoin has never been hacked. Bitcoin has, I would say, not had any issues in the last 10 years. Bitcoin has simply run continuously. We have an infrastructure here that works 24/7. That's why I don't know if one can actually say that Bitcoin does not bring financial freedom. Then a Japanese professor said here that he invented Bitcoin. Don't know where that comes from. I believe there was a Dorian Nakamoto who somehow claimed that he is Satoshi Nakamoto. But I believe no one who engages intensively with Bitcoin claims that Satoshi is a Japanese professor or something like that. He says that it must have been a group, so that it may not have been true with the professor, and that it must have been more of a group. And he says that there must have been great forces at work in the background to push Bitcoin forward. So he is probably referring to the idea that the CIA is behind Bitcoin, or that BlackRock has major elites behind Bitcoin. There are even people who, for example, say Elon Musk is behind Bitcoin. But this must also be viewed very critically, because the question is really whether, if it were known who is behind Bitcoin, that person or group would not have been leaked long ago. And secondly, it must honestly be said that Bitcoin did not really start rapidly, but rather very harmlessly. The first 2, 3, 4 years were really negligible. When Satoshi Nakamoto kickstarted the Bitcoin network, it took a whole week until the next block was mined because there were no participants in the Bitcoin network. So one cannot claim that the Bitcoin network has risen or grown very rapidly. The next relevant event was in 2011 or 2012, when Julian Assange also came into the spotlight because all his bank accounts were frozen. He actually used Bitcoin then, And Satoshi Nakamoto was still writing things in the forum at that time, saying, hey guys, you need to take it slow. You must not push the Bitcoin network too quickly, because if we push it too fast, if it gains traction too quickly, it can be destroyed by the state, as it is still very vulnerable, the hash rate is low, and so on. And Bitcoin is ultimately the Trojan horse here, but not in the way Ernst Wolff says, but rather, as Hayek put it, that an optimal currency, I would say, should be independent of states, that it should be hard money, and this money should ideally be introduced under the radar of the state. If the state catches wind of it, then this money will be crushed very quickly, and ultimately, just as Hayek predicted, Bitcoin has quietly established itself under the radar, as it has grown very slowly. And here one cannot say that Bitcoin has quickly seized power through any larger forces and has grown very rapidly. Of course, one can say that the whole story has gained momentum now with BlackRock and the Bitcoin ETFs, and I also see this critically. Ernst Wolff has repeatedly made very good points, and he sees many criticisms regarding BlackRock, and I can agree with that. The whole situation with the Bitcoin ETFs and BlackRock must be viewed very critically. He also says that very few people own a very large amount of Bitcoin, which must be clearly acknowledged. For example, Satoshi Nakamoto alone has 1 million Bitcoin, and no one knows who it is. Now we have Michael Saylor, who really has hundreds of thousands of Bitcoin and wants to scale to over 1 million Bitcoin. Then we have the Bitcoin ETFs, which also have a whole million Bitcoin. We have nation states that hold massive shares of Bitcoin and want to buy even more Bitcoin. But one must really distinguish, because with Bitcoin, it is not the one who has the most Bitcoin that decides, but everyone has a vote, and each vote is worth the same. This means that everyone can define their own network in their own Bitcoin note. This means that even if BlackRock has 5 million Bitcoin, they cannot change the rules of the Bitcoin network. I believe it is a big misunderstanding that many people, including newcomers to Bitcoin, have, thinking that if I have 10 million Bitcoin, I can change something in the Bitcoin protocol. No, I cannot change anything in the Bitcoin protocol. I might be able to manipulate the price a bit, which is definitely possible, and I also don't like that we have such concentrations. Let's say one cannot simply change the rules of Bitcoin just because one has, say, 10 million Bitcoin. And we also see that the distribution tends to improve over time, because with Bitcoin, there are simply no bailout packages. This means that if a project fails, or if a bank or BlackRock does something wrong, they cannot just print new money like in the fiat money system. In this case, profits are privatized while losses are socialized, meaning that taxpayers, or let's say savers, have to pay for it in the form of inflation. This clearly does not happen with Bitcoin, because if I gamble away my Bitcoin, I can't just print more. I can't simply siphon off the purchasing power of citizens through the Canton and money creation effects. What was actually an interesting point was that he says Bitcoin was an initiative to push people away from cash. And one must also understand that Bitcoin is actually something like digital cash. Satoshi already wrote at the very beginning of the white paper, Bitcoin, a peer-to-peer electronic cash system. So we can make peer-to-peer payments, that is, without a middleman, but in the internet, in the digital realm. And such a thing has never existed before. And one must also acknowledge the qualities of Bitcoin, that we live in a digital age. And I'm also a proponent of cash, so I'm not saying that cash is bad or anything, but much of our interaction now also takes place digitally. And digitally, there is no way to trade cash peer-to-peer. But since 2009, since Bitcoin has existed, there has simply been this peer-to-peer possibility to exchange cash in the form of thousands digital values. And Bitcoin has the additional advantage over cash that it is independent of states. This means that just because you have cash now, it doesn't mean you are safe in any way. Your cash is still subject to inflation, and your cash is potentially still vulnerable simply due to loss of purchasing power, but censorship is also possible. Cash can also be found in some way if someone knows where your cash is hidden, and so on. You obviously do not have all these disadvantages with Bitcoin. Furthermore, with cash, you cannot simply transfer 10 billion with the push of a button around the world without a third party. With Bitcoin, it is different. The purchasing power tends to increase because we have a limitation, as the central bank cannot simply create new money out of nothing. Therefore, one must say that Bitcoin is even something like cash, but with additional advantages. And then there was the issue of being a speculative object. Yes, Bitcoin can fall to zero because it has no intrinsic value. I would then ask, okay, what is the intrinsic value of old or precious metals and so on? And I'm also a big fan of precious metals like gold and so on. That can all be done. It was a very, very good investment. I don't want to dissuade people from that, but the intrinsic value argument is always somewhat far-fetched. I mean, intrinsic value is always subjective. If I am in the desert, I don't know, just about to die of thirst, then the intrinsic value or the subjective value is not the intrinsic value, but the subjective value of a bottle of water or something like that is 1 million. And if I have enough to drink, then the subjective value of a bottle of water in the desert is maybe $1 or $2. And that is the difference. Value is always subjective here, and one cannot simply say, okay, gold has intrinsic value, Bitcoin has no intrinsic value, therefore Bitcoin is bad and gold is good, or something like that. Of course, there is a certain utility value in gold, and I acknowledge that. There is none in Bitcoin, but that is precisely the advantage, that Bitcoin can only be used as money and not for anything else. Because what happens now if suddenly there is a huge demand for gold in the world, and somehow a lot of gold has to be used in industry? If we really had gold as money, then suddenly prices in the supermarket would also rise, and that makes relatively little sense. Now someone in the back is starting to cry, probably because he also realizes here that Bitcoin could actually be cooler. And then it is said that Bitcoin is just a speculative object and so on. If one argues like that, then of course gold is also a speculative object, or actually everything is speculation. I mean, even if you leave money in the account, it is also a kind of speculation. But what is meant by that is that Bitcoin probably has a very, very high risk, that it is probably something similar to pyramid scheme. In 2001, you can get in, and if many people get in, then its value increases, but it has basically no fundamentally underlying value or something like that. There's no reason why Bitcoin actually increases. So it rises here without reason, or it rises here senselessly. I have no idea if the argument makes sense here. In any case, Bitcoin could also fall to $0 for this reason. I see this as very, very, let's say, irrelevant. One must say it is not 100% excluded. Could be that aliens attack, the earth explodes or something like that, then Bitcoin won't help you anymore. But I would say that Bitcoin now has a track record of 15 years, which is relatively little compared to gold. But we are now seeing BlackRock, large institutional players, pension funds, countries, Bitcoin reserve strategies that are currently being inflated. And I do think that there is more behind it than just Donald Trump betting on Bitcoin, as he says, that everything here depends on Donald Trump, because we also have to ask ourselves, why is Donald Trump betting on Bitcoin? Perhaps because he has discovered the best store of value, maybe of all time, or perhaps because he recognizes the quality of Bitcoin. The reason Bitcoin is rising is not because Donald Trump is somehow betting on Bitcoin, but that Donald Trump betting on Bitcoin is just a symptom that Bitcoin is the best store of value. So it is essentially the property of Bitcoin that leads to Donald Trump betting on it. And the properties, underlying properties of Bitcoin, are actually what drive the price in the long term. That we have 21 million Bitcoins, that we have a halving every 4 years, that we have a secure, stable, 24/7 censorship-resistant network that is accessible to everyone. And that's why I can't completely follow his criticism, but I still have to acknowledge that Ernst Wolff's work is really very, very based, very, very good. And I also don't want to say anything bad about him or anything like that. I just wanted to clarify a few arguments here, because I would say that in the end we probably have a similar goal. We all want more freedom, we all want more self-responsibility, we all want to break out of the entire fiat system. We don't want to be enslaved by any large institutions, corporations, and whatever else. And I believe we have more parallels here than one really thinks. And in fact, it is often the case that one somewhat scoffs at Bitcoin, or let's say perceives it incorrectly, until one really does their proof of work here and engages intensively with Bitcoin. Therefore, I am of course always open to conversations. Feel free to reach out. I've actually already sent out 1 or 2 emails because so many people have written to me, hey, why don't you talk to Ernst Wolff? What you are saying here, also about the whole CBDCs and how they will be introduced, and all the problems with BlackRock and the dangers and so on, the central banks and the fiat money system. You have so many parallels, but with Bitcoin there is a certain dissent, and therefore it would certainly be very, very interesting to have a casual conversation so that one can discuss it in depth. So my offer definitely stands. I am of course open here, and I always look forward to talking about Bitcoin with new people who might still be a bit critical or skeptical. If you want to buy Bitcoin now, I will put a link below to Bitcoin, where you can easily and conveniently buy Bitcoin. The perhaps easiest way to buy Bitcoin in Europe. The code Bitcoin Hotel, you can get up to 20% off the fees. I am signing off here from El Salvador from the relaxed hammock. Until then, peace out, Usent.